Are credit scores, FICO scoring going away, or at least being weeded out when it comes to lending decisions in banks and institutions? And is relationship banking the tactic being used to push out FICO scoring or credit scoring dependency in lending decisions? Relationship banking is basically a concept or a strategy that banks use to increase customer loyalty by providing as many of their banking services and financial needs in one place. So they intend to provide as much service and as much value for clients in-house. And this increases loyalty, and obviously it grows the business. Is this being used? Is this being leaned on to remove the dependency on FICO scoring and credit scores? That's the question. I'm going to use one major institution as an example of why I think this may be a trend. And I'm going to tell you why this is likely a trend that will persist going into the future and could be very beneficial for you and your finances. So we're going to use Chase Bank as the biggest example because they're the biggest bank in the country and usually going to be the predominant trendsetter in the banking industry of where things are headed. And there's a couple examples just this calendar year alone. There's other things going on outside of Chase and in the banking world as a whole, but especially in Chase just this year that indicate that they are getting less and less dependent on FICO scoring models to help determine their lending decisions. So the number one example is going to be the Freedom Rise credit card that Chase Bank put out earlier this year in the first quarter. This is a credit card predicated on those or based for those who have brand new credit scores or brand new to the country with new socials. This is not designed for rebuilding credit. It's literally for those new to credit. But that having been said, you literally can get approved for this card with no credit score. And all you need to do is have a Chase bank account, a checking account, with $250 in it at the time of application. You have a very high likelihood of approval. Data points have come in saying that this has been very consistent throughout, those who have applied for it to test it out or those who have gotten it. If you have a Chase checking account, even if it's brand new, $250 in it at the time of application, you can get approved for the Chase Freedom Rise, which is a pretty solid starter card, by the way. It's not a bad credit card. The next example is a video I just shot not long ago where Chase Bank has rolled out a credit modernization program based around small businesses where Chase is literally not demanding or at least increasing the odds of not needing any documentation to get approved for up to $250,000 in business funding within their institution for small businesses. From my understanding, this is a $250 maximum exposure, so it's not like necessarily a single line of credit or loan at $250. It's kind of like if you have business credit cards and $50,000 in business credit cards, $100,000 in term loans, $100,000 in equipment finances, or $50,000 in equipment finances, so on and so forth. $250,000 in maximum exposure as a small business, and they will not require paperwork, or at least you have a shot if your financials in your business is established enough of not requiring paperwork. What predicates the ability to not need paperwork up to $250,000 in business funding with Chase? Relationship banking. You do need to have a strong personal credit score, at least a decent one of a 680 to 700 or above. But the bigger predicator, or at least a very significant one, is your banking relationship within Chase Bank. Your balances, your deposit history, how long you've had a banking relationship with them. This can get you in the door with Chase up to $250,000 in business funding as of the time of this recording. That is enormous. You're talking about one of the hardest institutions at one point in time to get any kind of funding from, let alone business funding, up to $250,000 in exposure without needing to provide tax returns, financial statements, W-2s. That is monumental. This is a persistent trend that I'm seeing. On top of the fact that so many different banks are providing Vantage scores over FICO scores, which Vantage uses is more likely to use alternative data than FICO is to come up with their scoring algorithm, to provide free credit scores for their clients. This trend is persisting. There's other things going on I cannot point out specifically, but there's some change where either the Federal Housing Administration or some bracket within one of those government agencies related to housing was using Vantage scores instead of FICO scores in their determination around home loans. So I'm very, very curious to see this trend continuing to move forward. What's happening is, at least for the private sector, banks are looking to expand their market share. There's so much immigration to the country. You have a whole nother generation of young adults cropping up in this country that have either no credit scores at all or poor credit scores. And we're talking millions of people who are either not scorable or have poor scores, some probably even tens of millions of people. That's a large market share for banks to be missing out on, depending on you to have a decent to good FICO score before they can lend any of their products to you. That's a lot of money left on the table for them in the private sector part of it. As far as any changes going on in the housing administrations where they're using different scoring models that are a bit more lenient and alternative, they're looking to reach more people and make housing more available to more people. So on both ends, this is something that could be very beneficial for us as clients and consumers, because now I can recognize if I have a really good income and good cash flow. Now I can recognize if I'm paying my more essential bills, and that's being identified, my utility bills and, water bill, insurance bills. These things are now getting spotlight on them. Rent has finally popped up the last few years where there's more platforms reporting rent payments to your credit history. This is a powerful shift that is taking place right before our eyes. And I'm going to tell you something. I push relationship banking very hard on this channel. And the reason for it is because it democratizes access to financial resources. It literally opens up the gates. It literally unlocks so much access to financial resources because, again, so many of us work hard as hell, good income, we pay most of our essential bills on time. We don't understand the credit scoring algorithms. We don't understand how to be, or we're nervous and scared to use debt. So we just don't have any scores at all or very low scores because we don't use much debt. We don't use credit much. But we make good money. We pay our essential bills on time. It does not mean because we don't have good FICO scores or good credit scores that we're not going to be good borrowers, that we are not going to be great clients for banks and lenders. And this shift is something that banks are identifying because more and more people are either don't understand the algorithm, don't feel comfortable with debt, or just brand new to the country, and it's going to take them years to build a decent FICO score. So they're skipping out on all that and paying attention to the client, or at least they're making room for clients to show good deposits. Excuse me. To make good deposits, have good income, and other alternative factors to determine that you could be a safe bet to lend to. Giving access to financial resources, supporting financial development, and supporting the growth of small businesses. Very powerful shift happening right before our eyes. And I'm telling you, this is something that you need to pay close attention to because it can open the door for you now and in the near future to take your strong suits financially and finally get access to the resources you need to finally take advantage of that business opportunity. Finally take advantage of that home ownership opportunity, investing in real estate. Whatever your goal or your focus point is, that lack of access to capital has built a wall up in between. This could be the opportunity. Relationship banking is a huge component, as well as showing signs of paying other bills on time. Alternative data can literally be the difference maker in your entire financial future. And I need you to pay attention to this trend, and I want you to like and subscribe to this channel because I promise to keep you up to date on it because this is in my backyard. I'm very much a big proponent of the banking system and relationship banking to, again, democratize access to financial resources for all of you out there. And this is something I specialize in, so I'm going to keep y'all tied in. I want you to comment down below and let me know other examples of institutions or signs you've seen that the financial system is weaning away from the dependency on credit scores when determining extending access to financial resources. I also want you to let me know what you think about this. What is your financial strong suit? Do you have good income and a poor credit score or no credit score? Do you have great deposits, balances, cash flow? What other financial strong suits do you have that you feel like should be lendable? I want you to comment down below. Other than that, to all my pioneers, welcome back. To my new viewers, welcome in. Want to learn more about myself in the channel? Start in the description section. Work your way to the about section on the channel. I want y'all to stay focused. Stay in motion. See y'all soon.
This is JP from Blueprint for Prosperity Network, a channel dedicated to helping you increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity.